This is Aaron Levine, LG Insurance, with another episode of the And Insurance podcast. Today I have my friend Brad Batcha here with us from Batcha and Batcha Real Estate Attorneys, right? What's the full name of your practice?
Batcha and Batcha.
Batcha and Batcha.
Yeah.
And
we do have that on our sign, Real Estate Attorneys, because it's pretty much all we do.
Okay. So Brad's a specialist in real estate law when it comes to people buying and selling their homes. Brad is also a specialist when it comes to waterfront-related properties and flood insurance and flood zones, I guess we'll call it. Instead of flood insurance, we'll take the insurance to my side of the table. But, you had personal experience when it came to rebuilding post-Sandy.
Yeah.
Not a fun experience. I can't wait to dive in and hear a little bit more about that.
But I learned a lot.
But you learned a lot. And, anything waterfront related in Monmouth and Ocean County, Brad does a great job with helping people understand what they're getting into to really make sure that they buy the right property and can live there happily ever after.
Yeah, this is a good point. I mean, I feel like I'm an educator because whenever I have a new client who's buying in a flood zone or especially on the water, we spend 20 minutes to sometimes an hour just kind of bringing them up to speed on what they need to know as a waterfront owner. So it's a different animal than buying a condo or a single family home away from the water.
Waterfront properties are great until the shit hits the fan or I should say the water hits the first floor.
Yeah.
Right? I mean, then it's no longer fun, and then you're diving into insurance policies that you have no clue what's really written in there and what you're actually going to get, and how much risk are you taking when you're purchasing the home and purchasing your insurance products is another conversation. But you're an educator not just with your clients, but through the Monmouth County Bar Association as well, and the state bar. So tell me a little bit more about what you're doing for other attorneys.
Well, I guess many years ago I got involved with the Monmouth County Bar Association going back to '94 when I was admitted, and quickly I got on a couple committees and was asked to speak at seminars. This was way before we had mandatory continuing legal education. Mm-hmm. And I've always felt it was a good thing for me to do personally because it required me to learn a topic if I was going to educate the other attorneys. So I would stay ahead of the curve, and ultimately it helps my clients.
Right.
So I ended up doing that for a number of years, and then I got involved with the state bar, who had a great section 2 on real estate, and I ended up working my way up the ranks there and was the chair of that section for the state bar. And so I was in charge of and this is when the mandatory education was in effect, I was in charge of creating seminars and programs for really all the attorneys in the state bar and then presenting at many of them over my time there. And I'm a past president or past chair now, but I still go back and am asked to speak at the state bar seminars for other attorneys. So sometimes we have a room of 100 or 200 attorneys.
Wow.
To go over this stuff. And we do it annually at the convention in Atlantic City as well. But on a local level, they kind of play into each other because I'll learn things from the state bar and I'll bring it back to my county and vice versa. And I've always tried to bring a little bit of a flood and waterfront component to the educational seminars we produce here because that's just in my wheelhouse. And it's also something that a lot of people don't know enough about.
Sure. And
I feel like it's an area where most lawyers might miss something. Certainly a buyer or an agent is going to miss something.
Right.
And unfortunately, what they might miss could significantly impact value. Mm-hmm. And so a lot of these discussions that we're going to talk about and the risks associated with them translate into value, which is critical at especially the buying stage for a buyer.
Right. So it's, Brad brought me in to speak to the Monmouth Bar Association, and the topic that I was responsible for was cyber insurance. And so like you said, when you're speaking on a topic, you're going to learn more. So I had to dig in and start reading a lot more articles that I haven't been reading and reach out to other experts that I know who just do cyber insurance for a living to really be able to put my content together. And then I show up and Brad's like, yeah, can you pare it down a couple minutes? So we did a great high level overview, but what's going on in the cyber market, the cyber world right now. We had a computer consultant reach out to our office. I need insurance. I'm signing a contract. What do you need? And I know what he needs, obviously, but it's like, I just need something simple. I'm like, no, You're touching computers. There's nothing simple about it. And if we're not going to do the right job and get you cyber coverage, we can't talk to you. You have to go somewhere and say, I don't need cyber coverage. I'm like, are you, that's kind of when I just wanted to tell them to go F off and hang up the phone on them, or try to educate them if they wanted to be educated, but they never called me back. So that's fine too. But I can't take those risks in my business either. Just like you need to do a great job of educating your buyers when it comes to their properties. Education is a big piece of running a good business, both for the general public, like we're doing here on the podcast, getting good content out there that people can consume, that have an interest in waterfront properties or real estate in general. I think it's super important to be able to share that information and not hide it. So we're in an interesting pivot right now in the local real estate market. What are your thoughts on what's going on right now?
Well, I agree. We're in what people might call a shifting market. Ever since probably a few weeks to a month or two after COVID hit, and we had the lockdown, we saw an incredible spike in demand in this area. And it probably was directly related to the fact that people were no longer tethered to New York City, and they had the freedom to work remotely, which is something that had been used occasionally, but it was never really acceptable in most companies. And now it still is acceptable because of COVID, and people realized how well it worked. It's obviously not going to be as truly remote, but it still, I believe, gives people the flexibility. And what happened is our area along the coast here was targeted as just a very desirable area to live. Sure. People still have family in the state. They still occasionally need to go to New York or North Jersey where their job is, but they don't have to be there every day. And so why have the winter home up in North Jersey and the summer home at the shore when you can just have a nicer full-time year-round summer home here? And so that I don't think will go away. But if you look at the prices and how they've increased over the past 2 years, they've shot up sometimes, certainly north of 20, sometimes 40% or more. And there's no parity there with people's income. And, I saw this happen years ago, probably about 20 years ago.
Okay.
And prices were going up. They were selling like hotcakes, but people's incomes weren't increasing.
Right.
Now, there's a little bit to do with the fact that rates were so low, so that increased folks' buying power. And now we're seeing rates come up to try to stave off inflation. That's reducing people's buying power.
Sure.
But there's still a steady demand right now. We're kind of maybe, if this does turn, we're kind of at the end of maybe the peak and heading down towards a more reasonable area. So it's really important to me as a real estate attorney, because I'm a transactional lawyer, to not only understand the law, but to have a sense of the market, because that impacts our ability to negotiate. I can't sit in a strong seller's market and demand the world as a buyer's attorney. We have to be sensitive to that.
Sure.
But my sellers were king of the hill for the past 2 years, and maybe that's not entirely true anymore. So we just have to take that into account when we're negotiating all the deal points.
So, I think the market is normalizing, right?
Yeah.
If there's any such thing as whatever normal is, however you choose to define it. But I'm in the middle of buying and selling both at the same time. And we were able to get a reasonable negotiation on both sides of it. And we took our time in attorney review. We took our time making offers. We took our time with inspections and inspection recommendations and requirements, and it just feels, it sucks, but it feels normal to be able to do that, unlike the stories and, the people that I would work with 6 months ago, a year ago, that were just waiving conditions. And I'm like, dude, you did an inspection. Your roof needs to be replaced. The insurance company's not going to like this.
Yeah.
You're going to be screwed, And then 2 weeks after they close, they get a letter from the insurance company. Your insurance is now being canceled because your roof is, basically has holes in it. And then they don't have the money to replace the roof.
For lack of a better term, people were flat out desperate to get a house, and they would do anything.
Right.
Including maybe, mow the seller's lawn for the next year or give them 3 wishes, It really didn't matter. Would you waive this? I'll do anything. Just give me the house.
There's some strong UNO deals that were put out there. We wrote quite a few renters policies for people, living in their prior homes until they could find a new home, because people just needed to buy.
Yeah. So sellers would say, you want to buy my house? Pay cash, close next week, and then I get to stay for 3 months. and buyers were like, okay, anything you want. And And that, to your
You
point, it ended up with situations like you described.
As long as we have a house, you
Yeah.
know, for the future. But
Right.
those become a mess. But let's talk about something fun. Waterfront real estate.
Yeah.
They're pretty to look at. You know, there's a lot of beautiful homes in our area. You know, I obviously get involved when it comes to flood insurance, and we look at the elevations of homes, and I want to get into the flood conversation. But there's so much more to buying on the waterfront when it comes to where's your bulkhead?
Yep.
Do you have riparian rights, right? Is there a dock? Was it legally put in?
Yeah.
I mean, tell me about some of the stuff you see and what people need to be aware of.
Yeah, that's exactly right. So if you're a waterfront owner, and this really holds true mostly for folks who are on the bay side or on a river, the oceanfront is a little bit easier, honestly, because the work we do with determining if bulkheads and waterfront structures are legal is a really important part of that. There's really, you know, if you're buying on the water, first of all, you're almost likely to be in a flood zone. It's rare that you're not, but some people aren't. But almost everyone's in a flood zone, so we have to have the flood zone conversation with those guys. And then when it comes to the waterfront side, there's really two general areas we have to talk about. One is, do you own the rights to construct a dock or any waterfront structures off of your property? And that varies. You know, sometimes you're on a lagoon, and the lagoon was developed by a developer who dug it out, and it used to be land, and they reserved the water rights to the upland owner. So it's simple, and you do have those rights. If you're not on a lagoon, then you likely are either getting those rights by a riparian grant or by a license to rent the space in the water from the state of New Jersey. The state of New Jersey owns any area that was ever covered by water. It goes back to the 1600s when they got the original deeds from the King of England, and they were granted to Berkeley and Carteret, and they came here and they owned New Jersey and started handing out all the deeds. Anything covered by water was always reserved back to the Crown, and when we won the Revolutionary War, the United States and New Jersey took that over.
Who knew it was going to be a history lesson to me?
So for years, people would go about, and there's this concept of a tidelands claim, and that's the area I described that was covered by water, either now or in the past. And there were some really inequitable things that happened where owners of property for many years learned that the state actually owned their property. So there was a bit of an outcry back in the 70s, and the state got their act together, and they published maps showing what they laid claim to and what they did not. And those were called tidelands maps. Now, more recently, in the past 10 years, those maps were digitized so that they're actually very accurate down to like the inch that a surveyor can plot them. So we need to analyze on all these waterfront properties, on really any property, but it's most common on waterfront, did this tidelands line coincide with the current bulkhead, or was it inside of the bulkhead? And the theory is, and the reason that this is, you know, it sounds a little bit like a harsh law, but the state didn't want folks who bought on the water to get their buddy to come down with a couple dump trucks and start making their property bigger than it really was. So they had to like draw a line, and they literally did, and said, here is where the water line was.
Right.
So if you want to go beyond that, you know, you're coming onto our territory. And when that happens, you have to settle that claim. I'll tell you one story which really illustrates this problem. We had a closing probably 25 years ago when I was a relatively young attorney, and my clients bought a home in Rumson on the water, and it was $1 million. It was a tear down. And
If only it was $1 million.
yeah. And so we did it, the searches, and again, they didn't have them as accurate as they do today, but nevertheless, we did the search, and it was a title company that I wasn't particularly fond of, but they chose to use. And they determined there was a tidelands claim, but there was also a grant. So grants were given out usually about 100 years ago or more by the governor to folks along the water, and it granted back to the owner those water rights that might have been covered by a tidelands claim. So when I got to file, I said to the company, you need to, you know, take a look at the grant and the claim and tell me if the grant covers the claim. Well, they responded that it did, and they omitted that as an exception. So my clients got full insurance, and we went ahead. So then about 6 months later, they went to build their home. They were informed by the state of New Jersey that the state actually did own the entire property, and the title company had made a mistake in looking at those old maps.
Wow. Okay.
So they had to come in and defend the claim, hire their own counsel, and I think they settled it for $400,000 or $500,000.
Wow.
Where they had to buy back the land that my folks thought they owned, but they didn't own. But at least they had insurance saying they owned it, so they were covered.
So, like you said, if your buddy comes in with a bunch of dump trucks and you build it out and put that new bulkhead in, and that was done 15 years ago, but I'm buying a house today, does the state make the new buyers or the sellers haul that dirt back out, or it's usually a financial transaction at that point?
Yeah, I mean, 15 years ago, that stuff probably didn't happen, but 50, 60 years ago, that probably happened a lot.
So if these properties have exchanged hands so many times, why is it still such a problem if, in most cases, the lines are drawn and the bulkheads are correct?
Because nobody looked at it properly. They didn't, the attorney or title company, somebody didn't really catch this stuff.
Okay.
We catch a lot of things, if you look at them, that get missed because title companies get busy, lawyers get busy, some people don't know about this stuff, and it gets missed.
Right.
So every waterfront deal, what we have to do is plot we have to get a surveyor that knows what they're doing, and they have to plot both the Tidelands line and any grant line that might exist. And then there's even nuances with that. There's different types of grants, and sometimes you can't determine what those grants are unless you go back into the 1800s and look to see what they paid for the grant. So it's a very kind of technical, nuanced area of law.
I wish we had these documents and maps because I love the old maps. Tom Santry, surveyor in Rumson, has some amazing maps in his collection that he's acquired and throughout the years when he's bought out other surveyors and taken the old maps. I mean, there's some really cool stuff out there in our immediate counties, especially around the waterfront.
So things can go unchecked for years. The way they come up and the way these claims get discovered is, number one, when a property's sold and the buyer looks at it carefully. And the other way they typically come up is when the owner applies to the state for a permit to try to build a dock or replace something or get a CAFR permit. And the state looks at the maps and says, hey, guys, right, we own this property, or you got to settle this claim, which could cost you, $10,000 or much more. Before we're going to entertain the permit that you applied for.
So does a buyer ever apply for the permit prior to the purchase, or do you try
Typically,
to vet
no,
that?
Because there's a very long process
Right.
that most sellers won't entertain,
Okay.
Not in this market at least. So if you had the luxury of that time, yeah, you would say it's all contingent on getting approval. And it depends how risky it is. We normally have an engineer come in who's pretty astute at this stuff, and they do what's called a feasibility study.
Right.
And they determine, based on the regulations and the topography and everything they see in the maps, what the likelihood of success would be to get a permit. And they say, you could definitely get this, you might get
Right.
this, you definitely won't get this. And then the buyer can determine if it's risky enough and if they want to move forward.
Interesting. If you've been listening, you just got a whole lesson, $400 worth of legal consultation just came out in the last 6 minutes. So all great stuff. Let's shift over to the flood insurance conversation, the flood zone conversation. You have a personal story when it comes to damage and rebuilding post Sandy. Mm-hmm. Tell us about a little bit of your personal experience.
Sure. I purchased a home in Maniloking in 2001 or 2, and it was a town that I grew up in every summer of my life and lived in either Bayhead or Maniloking, so I knew it well. I actually purchased it from a good friend's father, and I lived there for a number of years in an older home, and it was a summer home, and it came a time where I decided to renovate and fix it up and live there full time. That was about a year before Sandy hit. So we did some renovations. I was living there, and then Sandy came along. And it didn't wipe my house right off the sand as it did to many of my neighbors, but it did damage it with about 2 feet of water.
Wow.
And it was an older home, so I had to make a decision whether to raise and rebuild the house or to start from scratch. And looking at it, long term, I thought it was best to just start from scratch. So I went ahead and tore the old home down, lived on the property actually for 2 summers in an RV, which was allowed by our town.
That's cool.
Yeah, I think I was one of the only folks who took them up on it. And then started the building process. But during that, each town along the coast had to go back and re-examine their zoning.
Sure.
In light of what happened in Sandy. most of the towns really did not permit owners to build at a sufficient height to allow them to protect themselves from the floodwaters and let them get good flood insurance.
Right.
So I was actually pretty involved in showing up at the monthly meetings for our town and putting in my 2 cents of how I thought the new law should be drafted. Because when it came out, it wasn't particularly favorable, at least for the folks who lived in my neighborhood.
Right.
It was pretty good for the guys that were on the bay side. So I attempted to argue with them, and it wasn't particularly helpful until I did at one point said I'd have to file a lawsuit
Right.
challenging the ordinance as arbitrary and capricious. So then I was given an opportunity in a strange twist to present my case before the planning board. And they put me on the calendar as if I was an application, which is unusual. And I did go in, and I spent one night about 3 hours with a lot of charts and graphs, and I had to get all of my documents approved by the board engineer in advance, and made my case for why they should redraft the ordinance.
Oh.
And there was a lot of pushback that night, but in about 2 weeks later, they redid the ordinance. And so I was very happy with the result. And a year or two later, some folks at the town reached out and asked if I wanted to get more involved. So I became a council member, and now I run the CRS program, and I'm on the land use committee. I run that,
Okay.
the beach committee. So I've learned a lot more about the whole flood system through the engineers who I first met with in Manaloking years ago, and then I try to stay up in it. I go to the floodplain managers convention every year in Atlantic City, which is about
So are you a floodplain manager or no?
I'm not.
You're not. Okay.
500 engineers who I would rely on these things, and me.
Okay.
But I've learned a lot at those meetings.
Sure.
And that's really been my path to make me a bit of a specialist as a lawyer.
Okay.
I'm not a specialist on the level of an engineer.
Right.
But I understand what's happening with the maps. When Sandy was coming out, or right before Sandy hit, let's say, FEMA was in the process of remapping our area.
Right.
That started in 2010 for Monmouth Ocean County. And when Sandy hit, the maps had not been finalized, but they released the maps prematurely to allow people who were going to be rebuilding. There was going to be a massive rebuilding effort, obviously, to guide them in the rebuilding process, to say, here's our preliminary maps. This is where we think we're going to come out. And right on the heels of that, the state of New Jersey, and this is critical, the state of New Jersey adopted those maps as their law of the land for the building code. This has nothing to do with flood insurance, but it's tied in very closely with these maps. And they said you have to build anywhere in New Jersey must be 1 foot above where these FEMA maps are.
Sure.
Now, other towns, municipalities were free to make that higher than 1 foot, and some did. Seabright, Monmouth Beach are up to 3. But it's really important to understand that side of the flood maps from a building perspective, because the rule is that if you're damaged by more than 50% of the value of the structure, that doesn't mean what your house is worth, just what the structure would cost, or you want to make an improvement to that property that exceeds 50% of what the current structure is worth, you are required by law to raise the home to the height that's set by the state of New Jersey and the municipality. That's a really tricky and important point, because even if a buyer says, I don't care, I'll pay the flood insurance, I know we're not compliant, then you get in there and they want to put a second story on or do an expansion or
Right.
they get another storm, they might be stuck with a building inspector saying, we're not issuing any permits until you raise the house, which
Right.
could be incredibly costly. So again, it all goes back to value and buyers' abilities to utilize their home, and that's why there's a couple different sides to the flood maps. We have to make sure these folks can get a fair rate on flood insurance, and understand how that rate can increase over time. They need to understand the private markets and the FEMA markets, which are, the FEMA markets are crazy, which, as you know, they're capped at $250,000. Most of the homes in our area are worth a lot more than that. And so a lot of people are underinsured, and they need to seek out either surplus lines insurance or maybe just a private carrier for the whole thing.
Right.
This came up a lot post-Sandy when a lot of carriers got sued for not advising their customers that they were underinsured and they had the ability to get these other policies.
It's so tough. So back then we could sell FEMA products, but we could also sell excess flood on top of that. I think I sold 2 or 3 excess flood policies the year after Sandy, and then those all got dropped. Not to mention all the people that took disaster relief money who were required to purchase flood insurance and maintain flood insurance for life, as I think the contract was worded, who then dropped their flood insurance immediately thereafter, one year later. So a lot of funky things went on, but I'm a huge fan of the private side currently in today's market because we have so many options. The private flood market gives us full value in many cases, up to $2 million, and then we can buy excess over the $2 million. But the biggest thing for me, when I bought my current house, which is in an A zone, right? So we're in a high risk zone. We're moderately elevated, but my home had $140,000 of repairs post Sandy before I purchased it. My wife and I had a conversation of, if we have a flood, when the next one comes, are you okay that we're not going to be living here and we may have to go live with a family member because there's just not enough money to buy another house and fix this house with the limited insurance policy at the time. So I make sure that I have loss of use in my flood policy for myself, which I have currently, and the new home that I'm purchasing right now, I'm working with one of my carriers who puts flood as an endorsement. Therefore, I get full coverage on the dwelling, and then I also get full loss of use, which is more valuable to me than anything else. Same thing with business insurance. The business interruption is one of the most valuable pieces to that puzzle. You have to maintain your life. That loss of use on that flood policy is huge, and people just don't see it, and they don't want to spend the extra money, even though it's, in most cases, it's not a lot of extra money. But, that I don't want to take that risk.
Especially if it's your primary.
Right.
If it's like, oh, I can't go to my summer house till we fix it, that's one thing.
That's one thing. Right. But especially on the primary, we get a lot of people that don't take an appropriate amount of insurance, and we document as good as we can because we've learned that, without proper documentation that we're going to get sued, and, they're going to blame us because the insurance guys get blamed for a lot.
Yeah. I mean, I've been encouraging my clients to seek out private markets and with the risk rating 2.0, we see FEMA finally a system that's been bleeding money for 30 years.
Right.
With initially it was a subsidized system, and there were a number of bills that intended to pull the subsidies away. They didn't quite succeed initially, but ultimately the bill did get passed. And even with the subsidies coming out, FEMA's not run properly. I mean, they're 30 to 40 billion in debt, I'm sure. Yeah. And so they've taken the lead from the private markets and adopted an algorithm which is much more like what the private markets are using, instead of this static rule about whether you're in one zone and above or below where you're supposed to be. That was really all the old FEMA premium underwriters looked at.
Right.
So it's good to see that everyone's operating a little bit more like a business.
Right. They're trying to level the playing field a little bit when it comes to distance to water, period.
Yeah.
With risk rating 2.0, and we're seeing rates kind of going all over the place. That's why we're leaning on the private market, because we have those options, but we also run the risk that come claim time, that private market, well, I can't say that FEMA was quick to pay claims either. They're going to be gone, and then you're going to be going back into the NFIP with a claim, and then with risk rating 2.0, once you have your first claim, they do a 20-year look back. Your new rate could be 10x.
Can be a
right?
lot.
That's a scary thing to me that
hasn't
nobody
played
realizes.
out yet.
It hasn't played out yet, right? We haven't had that 20-year look back. I don't think in our area we had IDA last year that was pre-risk rating 2.0. So everybody got their clean slate on April 1st this year. So we have to see when the next disaster happens, how these things play out. And I'm sure Congress is going to have to come in and do something about that if there's a 20-year look back on some of these properties.
I mean, the one thing I think we all have to keep in mind, what I learned at all the seminars I went to, is that the folks who live in our area, in Monmouth and Ocean County, which are affluent areas along the coast, are likely going to see higher rates. And there's a lot of folks who have more modest homes and that were paying probably too high of a rate.
Right.
Because, again, FEMA was looking at it in a one-dimensional sphere. They had a $2 million house get $250 of insurance, and they charge them $1,000 in the same zone at the same height, and a $200,000 or $300,000 house, the same premium.
Right.
Yet, if both houses flooded with 3 inches of water, the $2 million house has a lot more risk and damage.
Sure.
So it's going to equal out, but you would see the folks I represent are ending up going to pay more.
Right.
And I think the takeaway, and this is true across the board, is like you said before, it's wonderful to see these homes on the water and to live there. It's a lot of fun, but it's not for the faint of heart. And it's not for folks who have any kind of financial problems. This is a luxury, and people need to realize that. It's a risky luxury, and you have to be prepared for the next storm. You have to be prepared to pay insurance, and hopefully you can find a home that's been raised and you have the best chance of sustaining and surviving a storm.
Yeah, I mean, it's having conversations like this. If you are looking to buy in the waterfront or anywhere in Monmouth or Ocean County, you can definitely reach out to Brad. We'll put all of his information somewhere, link in bio, and on this post, wherever we post it, YouTube, Instagram, Facebook, so on and so forth. Having this conversation before you put an offer on a house is probably important. Getting to understand what you have going on, super important. And reaching out to your insurance agent, whether it's me or somebody that's proficient in these coastal properties on the hazard side and the flood side, is going to be important. Really getting to understand what you're getting into before something happens and it's way too late, and then just understanding the insurance to cover that risk for yourself, for your bank, and for everybody else involved. So Brad, thank you so much for joining us today.
Oh, you're welcome.
It was great
Thanks.
chatting with
Yeah.
you. I appreciate the free time, and we'll see you soon.
All right.
Awesome.
All right.
Thanks.
Thanks, Aaron.